Hello and welcome to Options Guide TV. My name is Brian Overby. I am the author of The Options Playbook, and I'm going to be your host for about the next 20 minutes. Today is Wednesday, March 27th, 2024. The markets are open and rocking and rolling. And today we're going to spend a lot of time inside our deep in the money call portfolio, adjusting a couple of positions that have gone well for us. We're going to be rolling a call position that we are short and in danger of being assigned on. And we're going to also close out a position. So we're going to spend a lot of time inside that deep in the money portfolio of 5 different stocks that we are going to follow throughout the year and maybe add a few more to our portfolio overall. So the strategy that we use is buying deep in the money option contracts as a surrogate for the stock. So here we are inside the options playbook. We're going to look at the rookies corner. And here is the section called Buying Leaps Calls as a Stock Substitute. So if you want to learn more about how we started this strategy, you can obviously go back in time and look at some other options guide TVs and go back to November of last year when we wanted to get bullish on the market. We started buying deep in the money call options as a surrogate for the stock. And we said that we're going to ride this portfolio for an entire year and just see how this portfolio does. So with that mentioned, buying leaps calls as a stock substitute, this is where you would find this scenario inside the Options Playbook website. Now, if I scroll over to the other strategies that we have inside the options tab, if you go to the veterans strategies, you'll also see something called a fig leaf. And a fig leaf is a combination of buying deep in the money call options and then selling shorter term call options against it. It is an alternative to the covered call strategy where you buy the stock and then sell short-term options against it. So in the fig leaf, instead of the stock, where you would have hard lines and straight lines, and then you would have limited and known upside, the fig leaf just kind of has curvy lines. And that's mainly because instead of buying the stock, excuse me, we are buying that deep in the money leap option contract. So with that mentioned, I am still traveling and I have to switch out over to the TradeHawk software. Now, we do not have quotes on the real market here because this is a paper trading portfolio. So the SPY will serve as our SPX in this scenario. The VIX we do not get a quote on, but we see that the SPY is up a little bit today. Now, on Monday, we actually got lucky. We did a couple of speculative trades, and we mentioned that they were speculative, that we were just really doing an experiment. And during the show on Monday, both of the positions were down. They were a put butterfly and a calendar spread using puts. And by the end of the market, we did get the 20-point move to the downside, and both of those trades ended up being profitable. So you could have gotten out at a profit at the end of the day. Not exactly sure where you would say you would have gotten out of the trade, but I would have, if I could have just made even 20% on those positions, I would have. I would have just got out of them because time decay was not your friend, and they were very speculative trades. Probably went too far out of the money, even though it was just an off the cuff experiment we wanted to try. Kept the costs low, but it worked out in the end. And sometimes you get lucky with options, and that's exactly what happened with those positions. Okay. Now, I just needed to mention that. With that mentioned, here's our biggest position. We put this position on, we've added to it. We've actually already taken some good profits from this NVIDIA trade. We had 3 contracts. We sold one ahead of an earnings with the pumped up implied volatility. Now we have 2 remaining. Now, the one thing that we need to do, though, is we are way deep in the money on these option contracts. And one way that you can tell how deep in the money it is if the delta was 200 over here for 2 contracts, that means that you would have a one delta in your position. That means it's a surrogate for the underlying stock. So there's really no play left in these option contracts. They're way deep in the money. The bid ask spreads are getting wide. And I'm going to show it down here because we're going to end up rolling this position today. And if we look at this bid ask spread, we're 94 by 98. Just without worrying about the change here, that's 4 points wide or $400 for each contract that we're trading. We're going to try to get somewhere close to the midpoint when we do our roll. And when we're doing that roll, it will help us navigate this wide spread because we're going to be selling to close one option contract and buying to open another option contract. I want to stay long in NVIDIA. And so I'm going to go out in time. On Monday's show on Options Guide TV, we kind of just looked at a potential scenario where we stayed in that same expiration, which would be 296 days remaining. But eventually, I want to roll the Lilly position out. That position is doing really well too. Uh, 3 contracts are up 21,000 or 35% on the year. And we just bought one of the Home Depots, and I'm really surprised how well this one position is doing. We're up 70% on that, and that's a 4,000 because we only had one contract. We took a position and we were looking to add a little more, but before we knew it, the stock got away from us. Once again, it's a paper trading portfolio on Options Guide TV. We're doing most of the trades live on the show, and sometimes the stock just gets away, and it's that simple. We had it happen in Caterpillar. We already had a big position in Caterpillar. We took that position off, and we did very well on that position, but we got too deep into money on one of our call options, and we just closed it. So I do still want to find a good industrial stock. I've mentioned that a couple of times. I really need to just add one of those to the portfolio. And the portfolio, if we look at the account view here, we're this portfolio right now on unrealized gains is up 118,000, but we have some more profit and loss, but the paper trading portfolio isn't actually following it. So I'm going to use a different software, and we're going to build the portfolio to try to keep track of what happens with the call positions that we put on, the Caterpillar position that we took off at a real good profit, and also the NVIDIA position. So right now it's showing that we have a $329,000 portfolio. We started at 200,000. The concept was that if you had $200,000, we're going to put 100,000 in the market, keep 100,000 free. Interest rates are about 5%. It's an alternative to owning the stock. So instead of buying 100 shares of NVIDIA, if we could, at that time, I think the stock was at $430, somewhere right around there. We just bought a couple of call options. So we bought something that we might have done in our portfolio if we were just buying stock. But as an alternative to it, we managed our risk by buying the deep into money call option. We only had 20% of the total risk if we bought 100 shares of stock. And that's really what I'm looking at whenever I'm setting up a deep in the money option portfolio. Okay, so back to here. Here is our sell to close, and a real nice little thing that the TradeHawk software does. If you click on this, it shows you the position and it shows you the average price. So the average price is 170.47 on our NVIDIA position. It shows it there, and we're currently seeing it at $600, 597. That's the average position for the 2 contracts that we have on. We're going to go to the options grid, and I do want to move out in time. So another nice thing about the TradeHawk software is that it highlights where your position is. We have a position in somewhere in this expiration. If we scroll down to the 320 here, this is where our position is at, and we're going to sell to close this one option. No, that's the wrong expiration. That's why. Okay. And there it is, 320. There it is. Okay. So we're going to sell to close that option contract. The midpoint right now is 598. I talked about Monday's show that it doesn't really matter when I'm rolling this. unless there's a huge ginormous downturn, I it's going to be the market is down in Nvidia right now. It's down 23 points or 2.6%. That's a decent move. Obviously, any underlying stock to be down 2.5%, that's a detrimental move to the downside if you are long options or if you are long stock. But that means that the option contract that we're going to be buying is going to be cheaper, and the one that we're selling is also going to be cheaper. So we're selling it at a little bit lower price, but we're buying it at a little bit lower price. So I'm okay with doing the roll. The biggest thing that we just don't want is the stock to get cut in half and go all the way back to the 420, where that underlying market was at when we first put on our deep in the money option contracts. So I'm going to go out to June, the June 20th expiration. We may go longer in time, but June is actually going to be a real interesting month for the market because we're going to know if the Fed is actually going to cut rates. That's what the futures contracts is showing, is that there's a higher probability they're going to cut rates in June, and that meeting is June 12th for the Fed. When the big day where they may lower interest rates by a quarter of a point or 25 basis points. So that's where we're going to go. We're going to roll out to that far in time. It's about where we started on it. 450 days is the days to expiration. We're at 296 days, but I do want to roll this position up and out. Now, we're at 98 delta, like I mentioned, very close to 1. So this is acting a lot like the stock. The bid-ask spread is wide, and the deeper we get into money, the struggle with the bid-ask spread is going to continue. And that's one of the reasons, honestly, if we did not have such wide bid-ask spreads on these way deep into money option contracts, it would be really hard to say to yourself that you want to buy the stock. The biggest thing about buying the stock is, look at this. Gosh, we're about not even a penny wide on the underlying stock right now. So there we go. Now we are not even quite. So great markets in the stock, tough markets in the options world. If I could get a tight bid-ask spread, I would almost always prefer to buy options over stock if you manage them correctly. Okay, now the position that we're going to roll to, we're going to roll back up to about an 80 delta. Like I showed inside the options playbook, we're going to roll up to that position, and we need to go out to that June 20th expiration. Okay, so we're going to scroll down a little bit and literally just look for that 80 delta call option. So my eyes are focused over here, and we're right here. So 80, see where I like this option contract, the 700. First of all, it's a nice round number, but I'm looking at open interests, right? Market is 320 by 321.45. So much better market than our deep into money option contract. There are a lot of people that are interested in it. It's a nice round number, right around 700 on this. So what we're going to do is take these two option contracts with a cost basis that we're showing here at 170. We're going to be selling them for somewhere close to $600. And then we're going to roll up and take some money off the table, go out farther in time, still have a lot of extrinsic value. That's a battle that we're going to have here with Nvidia, because implied volatilities are right around 50%. Historical volatility is actually at 46%. So there's going to be some juice in these, obviously. Like this one, this is the true 80 delta. This is a little bit less, but the open interest is what's attracting me to this position, and also not a bad market, not a great market, but not a bad one either. Okay, so now we are selling to close 2 contracts, and we are buying to open 2 contracts. The midpoint is 277.50. Now, I want to get this trade executed, so I'm going to give up a little bit on the bid ask. So I want this executed before the show is done. I think we're going to go 279. 279. Let's try that. 277 by 280. Yeah. Uh, 280, 278.50. Let's see if that fills. Never know in a paper trading portfolio what will fill. Okay, so this is going to be a limit order. We're definitely going to work it. We don't want to give up that entire bid-ask spread. If this was in a non-paper trading account, we would probably try to go a little bit tighter. We would go closer to that midpoint, and I think you'd have a good opportunity to try to get a fill on that if we were in that range with a little bit higher open interest in that. But we're going to send it right here. Okay, so let's do this. We are sending an order for a long diagonal with calls, which basically means that we're rolling. We're selling to close the 320 January 17th expiration, and then buying to open the 700 620 January 2025 620 expiration. And we're going to do this for a net credit to the account of $278.50. Boom. And I know that my mug is right in front of it, but behind you will see that order was sent, and then we'll go to orders and we'll look at this real quick. All right, so we're going to let that work for a minute. We'll fill it before the end of the show. If you have any questions about what I just did and why I did it, I mainly did it to try to take some money off the table. Once again, go back to a situation where we have limited and known risk to the account, and allow us, if we want to sell some calls against it. In NVIDIA, we got lucky on a couple of calls where they went out just basically right at the money. So this one kind of makes me nervous to sell calls on. There's a lot of premium in those calls that we would sell, but I don't know if it's necessarily worth it because of the upside potential and how strong the stock has been moving. All right, now go back to the portfolio. We have that order working. Google, we got to do something about this. So Google right now is 149.43, but we got too much time. We're looking at the 4/12 expiration. So we're right at the money. That's when I like to roll, when it's actually trading very close to where that strike price is at. And so we're going to take this position and we're going to roll it. And I'm sad that we're already out to February 12th, but we're just going to have to do that. The only other alternative that we could do is we could just close it if we wanted to. Google has had some good news come out with them and Apple's actually going to be making some statements about their AI strategy coming up. And Google has been involved in those statements. So one thing you could do is just close it and say, I was wrong about the market. I didn't think it was going to go above 150. And our cost basis on this position is we brought in a net credit of $3.95. It's actually trading right now at $2.96 on that option contract. So we could just take that position off and we're not really hurt on that. As a matter of fact, we're going to be up money on that position by taking that off. But I'm going to roll it. It's had a good run up, even though little nervous about what might happen with the statements from Apple. But right now we have this position on the 412, 419 would mean that we're going to roll it out. That's a 64-cent net credit. Let's look at 652. That goes to a debit in that situation. And we're buying to close the 150. We're selling that. So we got to go out to the 26th in order to get that to be a credit. So let's look at the 19th. So it's small net debit of 44 cents. And we got to go here. And then we bring in a credit of 142. And then my last option would be to go up a little further and strike, which would mean a 10%. A 5-point move. Well, not quite 10%. But let's see. Okay, 49 cents. All right, I think this is where I'm going to go. I like the credit on the 152.50s. I like that credit of $1.39. That's not bad, but I'm a little nervous about the comments from Apple. So let's look at buying to close the 150s. We're going to go out all the way out to the 26th and go to the 155. We can get that done for a net credit of 49 cents. I'm going to give them once again in the paper trading portfolio and give them a little bit more than that, 49. So we'll go down to we'll go 45 and we'll send this order. So we're buying to close one of the 150 Google option contracts that we're in danger of being assigned on. And we're going to sell to open the 426 expiration 155 call options. And this is going to a good till day answer order, net credit of 45 cents. We should be able to get that inside this paper trade portfolio. All right, and that one is once again behind my head. It shows that that order has been sent, and we're going to look at these two orders right now. The NVIDIA has not rolled yet. Okay, so now other little cleanup that we have to do, and I'm not going to do it on today's show. If you have any questions, once again, please, if you're on the Tradier YouTube platform, you can throw them in the chat box and I can try to address them on the show. But the Lily position is getting close to 1 on our Delta 2. So we have 3 option contracts and the Delta is at 285, right? If it was 295, we basically would be at a delta of 1 on these positions. So this needs to be managed to way deep in the money on this option contract. Got a good we've made some good money on it. We need to close out that position and roll it up and out in order to accomplish that. We'll do that on a different show, but we're going to basically take the same approach that we had in NVIDIA. Like to stay long, Lily. We're going to go out to the 450-day option contract and we'll roll up and out in time on that position. Oh, Charles Schwab, forgot about this one. Didn't really forget about it. We're up a couple of pennies on this one, and it's a little too close for comfort here. The expiration date is Friday, so we just got a few days remaining on it. If it was a stock position, I might stay in it. I do not want to be assigned. We are sitting here at 71.60. The strike is 72. So here's all I want to do with this is close at let's send it to the ticket, and we're just looking to close this out. So we sold this option contract for 28 cents. We had a real good move up in Schwab, a solid move all the way up to the 72 level. We were quite a bit out of money because we didn't we only brought in 28 cents, obviously hoping that there wasn't going to be any risk on getting a sign. But I don't want to mess with it. And once again, I'm just trying to trade during the show, so I'm just going to close it. I could roll. I could go out 1 week and try to get a little bit more premium on it, but I kind of like where Schwab is at right now. I like what the market is doing. All the potential for rate cuts should really help that underlying stock. So I am just going to close it. Ask is 23. We're 21. We'll go 22. Sell to close, buy to close. I'm sorry. 3 of the March 28th, the 328 option contract, 72 strike. And we're basically doing it at the market. And boom, sent to the floor. Once again, it shows up over in the event calendar. And if we go to the orders, that one should fill right away. Okay, that one filled. The Google one filled, and the NVIDIA one is still open. I'm sad that that one didn't give me a fill. So let's take this position, and we're going to adjust it. Right now, 278. We'll bring it in for 273, 279, 276, we're gonna go down. Yeah, we had to go down the wrong. Let's go 275 net credit. Let's try that. And replace. And then I get the little, are you sure you want to replace this order? Yes, we do. Let's send that to the floor. So now we're showing a limit of $2.75. Yeah, and that should fill. 274. Here is the net credit. That's the worst case scenario. The best case is 280 net credit. We're trying to get 275 on this. All right. Well, there we go. Boom. Filled. So if we go in our portfolio, we are now out to the June 20th expiration, 700 strike calls in NVIDIA. We're going to have to go back and our profit and loss doesn't look as impressive, right? See if it put a lot of that into the portfolio. Yeah, realized P&L is 85, so it did add that position. Good. Wasn't honestly, I wasn't quite sure what it's going to do. I'll have to look at it tomorrow and see if it's going to show that profit and loss, but it does show the cash of 329,000. Once again, this is a paper trading portfolio, very, very similar to the actual trading portfolio, but it doesn't quite do the accounting as close as my regular brokerage account does. Okay. Trading portfolio. Schwab, there's no longer a call option on it. Google, we're out to 426 and we're on the 155 call. All right. Well, that's it for this edition of Options Guy TV. Please click subscribe, ring the bell, and we will come back on Friday. Maybe look at moving the Lilly position. I think that's where I'm going to kind of hang at. Very curious to see what happens in the market. There's not a lot of economic data today on a Wednesday. It makes it fun to kind of trade the market, actually. I kind of would rather trade the market when there isn't a plethora of data that's coming out. You can trust the charts a little bit better, just a little bit better scenario. You're not, you can't get blindsided as much by economic news. So on Friday, we'll probably look at another trade in the S&P 500 index, and that will go a week long. And I will see you this Friday. So please click subscribe, ring the bell, make sure you get all alerts for the next Options Guy TV. And thanks for coming, everyone.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and/or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and/or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.